Yeah, I mean, you heard Treasury Secretary Bessent said they're playing a poker hand with a pair of twos. Um, they've got a banking system that's 3.5 times more levered than ours, and they've only been at banking roughly for 20 years, like real banking. So they've got a system that's levered to real estate, and real estate in China is down 30 to 50%, depending upon where you are. So they've got an insolvent banking system. They've got runaway unemployment amongst your youth. They've got another 12 million kids graduating their universities this year. And so you've got youth unemployment, a banking system that's insolvent. You've got a real estate collapse. And so when you're asking me what tools China has, they've got a couple of places where they could really press us, right? One, believe it or not, we still have the majority of our active pharmaceutical ingredients for all antibiotics in the US made in the city of Wuhan. Yeah, that's just it's a sad truth. And then on the finishing side of synthetic graphite, on rare earth minerals, if you remember back in our trade spat in 2019, Xi Jinping made a visit to where they do the rare earth metals finishings, and
Hmm.
we haven't seen Xi since April 7th. So we'll see. Um, we'll see what he does, but he can start withholding things like antibiotics and rare earth minerals. But this is something that our administration has thought through.
Well, Kyle, I wanted to talk to you as an investor now, too, because as Sonali mentioned, of course, China has been signaling that it'll gradually let the yuan weaken. And I'm curious how you're approaching that, whether you're seeing that as a trade and betting against the offshore yuan.
No, I think I'm not at the moment, but I would say that it is not under China's control. When you think about, go back to the Asian financial crisis of 1997 and 98. It wasn't Thailand's decision to let go. It was Thailand running out of reserves. And so when you look at China and the offshore yuan, in the end, China's got to spend dollars to support that relationship. And China needs a strong yuan. They buy 13 million barrels of crude every day, 8.5 Bs of gas every day, and they buy 40% of their food every day in dollars. So if for some reason they have to let that relationship go and the yuan weaken, as we saw it weaken 2 days ago to its weakest level ever, um, we'll see if that relationship holds. And my view is that when you look at the differentials in interest rates and you look at China's bond market, the one thing that can't be lying coming out of China is their bond market. Look at the Chinese 10-year; it's collapsed. So their economy is in a very different place than ours, and that relationship between the yuan and the dollar and the Hong Kong dollar and the dollar that's a tenuous relationship, and we'll see what happens.
Hey, Kyle, just quickly, what do you think the most they can allow the yuan to weaken is? I mean, where's the point where they have to step in and can't allow any more slippage?
Yeah, I mean, it's just begun. All you've seen is a move from roughly 620 to 740 over a period of time. So, typically, again, when countries run out of reserves, as you know, the currency flaps in the wind. So there's this concept of them, quote, controlling where it is, and then there's the uncontrollable moves. And what we saw in the Asian financial crisis, even with the largest player back then was South Korea, we saw some pretty notable currency moves. And I think that's coming. And, I don't know if it's coming in the next month or so, but I'll tell you the interest rate differentials, the business cycle differentials are going to dictate the movements in the currency. So we do expect the Chinese currency to weaken pretty materially against the dollar.